Hello everyone and welcome to ABG Investor Days. The time has now come for us to host Lagercrantz with CEO Jörgen Wigh. Jörgen, thank you so much for joining us today.
Thank you for having me.
So before we kick off, Jörgen will give a presentation of Lagercrantz, and in the space of time or context of time, I will afterwards ask a few questions. But without further ado, Jörgen, please.
Thank you very much. I'd like to give a 20-minute presentation of Lagercrantz in introduction. I have decided not to sort of go over the sort of recent numbers very much, but rather give you an introduction to the group, and then we have our website www.lagercrantz.com as our homepage, and there you can find more information about the recent numbers. So I'll give you a general presentation. I will focus somewhat to the acquisitions that we made and the sort of acquisition direction and the scope we have for acquisitions, which is very important to us. So that's how I plan to spend my 20 minutes. So let's start with the next slide here. Lagercrantz is then an introduction to the group is that we are a tech group working with business-to-business technologies in expansive niches. In the chosen niches we have decided to be in, we would like to be the market leader in what we're doing. And currently we have some 54 different businesses, and we have organized them in the 4 divisions you can see from here. And they are all trying to achieve or are the market leader in their specific niches. And we have then decided to name them their profit centers, because we also measure and are very sort of keen on following up on the different businesses and through that sort of manage and drive the growth of the different businesses. As you can see, we are from the map over to the right, you can see where we're present, where we have our businesses, and you can see that we are predominantly in the Nordics, but we also have a number of businesses now in the Northern Europe with the UK, the Germany, the Dutch region, and also in Poland. Over to even further to the right, you can also see that we have increasingly along the way been focusing on proprietary products and going for more of exports. So over to the right there, you can see some footholds that we have in different other markets, important export markets for us as a group, where we try to sort of collaborate between the companies and create some hubs and footholds where we can work from. We have one in Chicago, for instance. We have one in a couple in China as well, and you can see where they are over there to the right. We are some 1,500 employees in the group, and we have a turnover of some 400 million euros or 4 billion Swedish crowns, which is the total revenue of the group. And again, acquisitions and M&A is a very important part of how we grow. We plan to make 4 to 6 acquisitions per year, something that we have been in the neighborhood of for quite some years now. And we have been, as a separate company, listed on the Stockholm Stock Exchange since 2001. Before that, we were part of the Bergman and Beving Group, which has roots all the way back to 1906. So we have been working very long with sustainability and a long-term perspective of everything that we do. And that is also part of the DNA of the group. So that is an introduction to Lagercrantz. Let's move to the next slide. Looking a little bit at the numbers, what we did in 2005, the group had gone sideways since the separate listing in 2001, and we were not at all satisfied with what we were achieving back then. And you can see the volumes and you can see the margins were quite low back then. We were used to having margins at some 3% level or so. But since then, we have reorganized and refocused the group to something much more interesting, I think, with much more of value adding, much more of proprietary products, and then also focusing on putting on the decentralization and the management of objectives way of running things, with a new corporate governance model introduced in the group and implemented by now, and we're very familiar with how we work within the group currently. And you can see also how the profits have evolved since then, and with a steady upwards trend in that. And you can also see that since the scales here are proportionate, the one to the right versus the one to the left, you can also see that margins have increased along the way here. So from 2016 or so, we have constantly had margins of about 10% rather than the 3% we started out with. So a very nice track record back and a turnaround that have been successfully put together within the group. Even further to the right, you can also see that we have had some effects due to the COVID-19 with a couple of weak quarters. But here in the last quarter, we also had some improvements again in profits. So a strong last quarter we had. And before that, we had some COVID-19 effects, but not severe. And we have been discussing some range of around 5% or so top line. But since costs have been brought down and cash flows have been focused, we have been managed to keep our profits at a good level, even through the pandemic. So that's a little bit of background of how the profits have evolved in the group. We can turn to the next slide. Looking where we're heading with the group, I think we have a very strong business concept within Lagercrantz, and the financial performance proves that. What we'd like to build is a strong portfolio of companies, all doing business-to-business technologies with high value add, working in niches and achieving or developing market-leading positions in their separate niches. So we would like to be a leading supplier of value-adding technologies with market-leading positions in several expansive niches is our vision. And I think that's working very well for us. And through building this very strong portfolio of very specialized and niche-oriented companies, we shall manage to have an annual growth of 15% per year in terms of profits, and we should have a high profitability with a return on equity of not less than 25%. Internally, we have sort of transformed that profitability measurement to what we all work with is the profit over working capital, which should be not less than 45%. And currently we are well above 50% when it comes to the profit over working capital, meaning that we are doing this in a successful manner in general and in many of our companies. So this is also where we're heading. This means that the company and the group has basically doubled its size every 5 years, and we have been doing that and plan to do so also for the future. Something that we are well accustomed to within the group. So that's where we're heading with the group and what we'd like to build. Let's move to the next slide. And in doing so, the focus on value add is of course very, very important to us. And here you can see how the gross margin has evolved. The value add is really the sort of feedback from the customers that the customers are willing to pay for what we provide for them in terms of value add, in terms of strong products, in terms of how we work with the customers and how we deliver towards the customers. And this is a strong focus within the group. And you can see here how that's evolved since 2005-06 all the way up until now, where we had an all-time high here now in the rolling 12 months here with the 38%. Early on in this time series, we did this quite a lot with sort of setting goals and restructuring and changing things within the business that we already had, and that brought us far up on this scale. But along the way, we have also then decided to also increase the share of proprietary products. So we also changing the mix of what we're selling, also driving this even further here in the later part of this time series. So that's sort of how to sort of understand this chart. And that brings me to the next slide, which is then the share of proprietary products. Here we are aiming at the 75% proprietaries. You can see how that's evolved also. That's the gray part of this scale. And you can see in 2006 we acquired one of the first companies that we had with proprietary products, which is the Elpress company within the mechatronics, and that brought us to the 13%. But since then, we have constantly been working with increasing the share of proprietary products. As we see that proprietary products have higher gross margins, and usually there are stronger stronger companies, and that also means that the opportunities for organic growth are usually better when we talk about companies with more proprietary products along the way. We have decided to keep and still develop the value-adding distribution part. So we still make some acquisitions within value-adding distribution, but then that's also should be seen in connection with the proprietary products, since the value-adding distribution companies is usually sort of sales channels into different new geographies for the proprietary products type companies. So there's also a connection between those two in what we're doing here. But we have set a clear target that we, within a couple of 3 years or so, we should aim at the 75% proprietaries, which we, as you can see here, we're about to sort of, we definitely have the trend for that here in these numbers. And that will push both, as I see it, it will push our gross margins and through that our net margins as well. But it will also provide better opportunities for us to create organic growth, which these companies have better opportunities for really as their position. Let's move to the next slide. Organic growth is also a very key component in how we drive the group. We have during these years and previous years been sort of done quite a lot of pruning, cutting out low margin businesses and doing that. So looking at the pure numbers, we have this has been something of somewhat over Achilles heel, not delivering on the organic growth. But as we now are getting into more of a phase where we have more proprietary products within the group, and we have phased out basically a lot of the things that we were not happy with, the opportunities for organic growth should be better going forward. And here we have the toolbox, really a long list of things that we would like to do within the group in order to provide better organic growth in our companies. I'd like to highlight a couple of things here. Of course, a lot is around board works and business plans that we put together, but we also have the BIMs, what we call the business improvement modules, where we basically have some modules or key knowledge centers that we can sort of dock on or run as a project or a seminar or something like that in a specific company in order to drive sales, exports. We have one around pricing, we have one around digitalization, we have one around stock turns, we have one around credit days optimization, in order to provide the knowledge and to drive improvements in these dimensions in a specific company. And usually when a company put together their business plan each year, they usually would like to run one or two of these business improvement modules in order to reach their targets or their goals for that specific year, and build the business into better shape for the future. So that's a key thing that we have in our in the way we work with the companies. We also have the Lagercrantz Growth Fund, which is where we provide funding or financing for out of the ordinary initiatives in order to drive growth in our companies. Also something that's very appreciated by the companies and the organization within Lagercrantz, and a number of other things in order to provide better organic growth. So that's a key theme in building the group for the future as well. We can move to the next slide. A little bit around acquisitions. I will spend a few minutes around that. This is really part of our DNA. We have been around for quite some years and made numbers of acquisitions throughout the years. We have made more than 50 acquisitions since 2006, as you can see from here. So basically, most of what we have in our portfolio in Lagercrantz, we have acquired in the last 15 years. And usually we try to put a push for having 4 to 6 acquisitions per year. One could argue that we should have an even higher number for that, and that is something we are looking into. But we also would like to take good care of the companies that we bring into the group and build something around them, integrate them with putting together business plans and work so that we get them in sort of working for us and growing nice and healthy within Lagercrantz. And therefore, I think a good pace of 4 to 6 is also it's a good number for us given the size that we have at the moment. And how do we work with this? Well, we have a gross list of companies we would like to bring into the group. We have currently some 300 companies in the database, companies that we would like to potential targets, potential companies we would like to bring into the group, and we sort of run that list and try to come in contact with the companies and have meetings with them and talk about Lagercrantz, and when they are for sale later on, hopefully we are the ones that would like to choose in that situation and come into the group. And you can see, and we do this also along the way. We also build more resources around acquisitions. So we started out with having basically a team in Sweden, but currently we also have a team in Denmark going. We have a team in Finland going. We are setting up a team in Germany as well. So along the way, we are also building capabilities in order to run more than several acquisitions simultaneously in how we build things. So that's also a key thing within Lagercrantz. And I'd like to round off with a couple of companies that we have acquired so that you can all see what we have within the group. So let's move to the next slide. A company we acquired a few years back, it's basically in 2017. It was the Archon. This is a company in Norrköping, south of Stockholm, 2 hours south of Stockholm, basically. This is a company making different types of pumps and infrastructure for sprinkler systems. Sprinklers providing water when there's a fire inside houses and warehouses and that type of thing. And Archon has a very strong market position in Sweden, especially when it comes to providing that type of infrastructure. You can see how the company has evolved before we acquired it up until 2016-17, and since we have acquired it, this company has more than doubled. We have refocused the company, being even better at what they're doing, cutting out some directions that were not really successful for them, but becoming even better at what they're doing. We have increased also the infrastructure within the company with better follow-up routines and stronger also systems within the company. And we have made one add-on acquisition with this company, a smaller add-on acquisition providing these type of tanks that you have for the water. They used to have that on the common water or the water of the municipality earlier, but that is no longer allowed. Therefore, so in many instances, we put up tanks instead in order to provide the water for the sprinkler systems, and that has been a very good add-on for this company as well. So a very good successful story around Archon. Archon is our second biggest company. I mentioned earlier that Elpress is our biggest company. Archon is within the division communication, is our second biggest company. And that number 2 position has been challenged by also the next company I'd like to, so that's the next slide, please. And that is the Toolmec company. Toolmec we also acquired in 2017 or somewhere there. And they're making these sharpening tools or sharpening systems with edge tools for sharpening knives, chisels, as well as tools for wood carving, as you can see from there. And this is a pure premium product within this specific niche. And Toolmec is doing extremely well at the moment with these products, providing different types of product development, launching new types of sharpening machines, and going for exports. So currently they have great success in the US, but also in Germany and mid-Europe. They're also being very successful. And this is one of the fastest growing companies within Lagercrantz at the moment. And they have also been doubling their profits since we acquired them. So that's also a very good success story of what we have been able to achieve with the company, based on the company itself, of course, and the management team locally that has been doing the job, but also facilitated by Lagercrantz as a new owner of the company. So that's also a good story. Let's move to the next one. A third example is the frick tape business. The frick tape business we acquired a little bit more than a year ago. They are a Finnish company with very strong position within providing a different type of security system for helidecks or helicopter decks, usually offshore. And you can see from the pictures there what they're providing. It's the nets, and there's also the lighting for the nets. And you can see from all the acquisitions we've been making, and you can look also at their homepage, you can see these type of fact sheets for the companies we have acquired. And you can see down to the right here that most of the time we acquire very high profitable, very nice companies, small but very, very healthy margins and doing very well. And you can see that from all the companies that I've chosen to show here, but also from the number of companies we have acquired. So that's a common theme for how we would like to build the business, by acquiring these niche-oriented companies with very stable and good margins, and with good growth opportunities. So this is another example of that. The last acquisition I would like to mention is the next one, which is the Sajas Group. Sajas Group we just acquired here a month ago. Sajas Group is an add-on. We already have a company, the Swedish Industrial Brushers, or SIB, which is a company in Västerås. And here is an add-on that will bring us not into road sweeping as well, with brushers for that, with a market-leading position in Finland and in Sweden, but also some significant volumes also in the German market. So this we would build somewhat of a cluster with the SIB business and the Sajas Group together along the way. So that's another good example of a recent acquisitions we made. Also a very niche-oriented, strong company. Here you can see the Ebitda margins is not entirely where we would like to have them, but that we also have some clear measures been taken now to address that along the way here, so that we can also bring that well above 10% is the margin, is the target here. So that was my last slide. Basically, I round off with the financial overview. I mean, Lagercrantz has a very strong concept, I would say, and you can see here a very good trends in most numbers. You can see the net sales growing, you can see the Ebitda margin growing, and the Ebitda growing as well, and you can see the return on equity. I earlier mentioned that it should be 25%, and that's our goal. And you can see that we've been in the neighborhood of that, even though not fully there all years, but still in the neighborhood of 25%. So it's been a successful story so far, and we plan to keep it that way. That's the background of Lagercrantz.
Thank you, Jörgen. So my first question has to do with the Swedish landscape, because as some who are watching might know, you do share your heritage with some other industrial trading and industrial acquisition intensive companies from the Bergman and Beving group a while back. So for people just looking into these kinds of companies and business models, how would you say that Lagercrantz differentiates itself among these serial acquirers?
It's always depending on who you compare us with, but I think if you compare us with AdTech and usually in the trade, and also Lifco is some sort of, and we have similarities, but we also have our differences. I think looking into sort of the sectors we're in, that difference a little bit. I also think that we have been more clear on and outspoken around going for proprietary products. So the margin expansion that you see from us is something that is I think that proves that that's the right track for us to go for. So that's one example, and then it's the different sectors. The technical areas that we're in is another difference, and I also think we have a little bit of differences when it comes to how we integrate and work with the companies. I think we are all keen on keeping the decentralized mode and have the companies work as very independently. That is a common theme, but it varies how far you let that go. I think the business improvement modules that I mentioned is something that we have, which I'm not sure the other ones have. So that's one key value driver for us, I would say, when developing our companies. So that's a few differences, even though they're not. I also think a fourth one maybe is the size. I think that we are. I like the size we have. That means that we still are somewhat smaller than some of the others, and that means that it's a little bit easier for us to be agile and to approach different type of companies when it comes to M&A. So that's I think that works in our favor. Even though some would disagree maybe, but I think that's a favorable thing for us.
We are running out of time here, so the final one would be you've been the CEO of Lagercrantz for quite some time now. What do you feel that you've been, or what do you think that you've been the most happy with or about since you first joined the company, and what do you feel is left to do going forward?
I think we've had a very strong performance and a very strong turnaround since I started, and I think the strategy change back then was very, very right for us, and to have that to both sort of put that together and then deliver on that has been very sort of satisfying for me. That's really great, and I think there is much more to do. I think going forward, we have more acquisitions to be made, and we are sort of constantly looking over how to work within the group and how to evolve and how to set up things and see some changes along the way as well, and develop the organization along the way. And that's very sort of I'm very enthusiastic about continuing. That's for sure.
Well, with that, I think our time is coming to an end here, at least. Jörgen and Lagercrantz, thank you very much for joining us on behalf of ABG.
Thank you very much for having us.